The next topic which we are going to study about terms of credit is if you want to obtain a loan from bank, what are the terms and conditions should be satisfied. Every loan agreement specifies an interest rate which the borrower must pay to the lender along with the repayment of principal amount. Is when you are going to bank, take a loan, you have to sign an agreement. You have to sign a lot of papers, and that is what we call an agreement. And the agreement interest rate is mentioned. And the borrower has to repay the principal amount plus the interest rate. Now, what is principal amount? Initial sum of money borrowed from a lender. Initial, in the beginning, when you go to the bank, take a loan from the bank, that is what we call principal amount. Initial sum of money borrowed from a bank or a lender. In addition, lenders may demand collateral security. Now, what is a collateral security? Collateral is an asset that the borrower owns. What you have in your hand. It can be land, it can be building, vehicle, livestock, animals, deposits with banks, and this will be used as a guarantee to the lender until the loan is repaid. That means you have to repay the principal amount along with interest. Afterwards, you will get your collateral. Bank is demanding collateral security as a kind of precautionary measure. It's an asset that the borrower owns and uses this as a guarantee to the lender until the loan is repaid. If the borrower fails to repay the loan, what will they do with collateral security in which you are the owner? Lender has the right to sell the asset because he has to get his money back. Getting his money back, the collateral security, that is, it is your property and all, will be sold. They will try to procure the money. Property such as land title, that is the legal document that proves the ownership of a piece of land, is land title. Deposits with banks, livestock are common examples of collateral. So it can be your deposits. You are keeping some amount of money with the bank. It can be used as a collateral. Then the land title, that is your property document and all. It can be used as a legal collateral security. Then livestock. Now, interest rate, collateral, documentation requirement, and mode of repayment together comprise what is called terms of credit. That is, what is the interest rate charged, what is the collateral securities demanded by the bank, documentation, your ID proof, other address proof, etc. Then the mode of payment, how you would pay the money, how you will pay the money. So all the terms and conditions will be written in a paper, and it is what we call terms of credit. The terms of credit may vary substantially from one credit arrangement to the other. One credit arrangement to the other means, if you look at the definition, that is arrangement between a lender and a borrower. That is a credit arrangement. That means it is different for different institutions. It can be different for credit arrangement, that is for money lenders. It can be different for a scheduled bank. It can be different for a private bank, etc. Different kinds, the sources of credit are there, and for the different sources of credit, we are having different credit arrangement, different agreement. They may vary depending on the nature of the lender and the borrower, as I told you. Now, why do lenders ask for collateral securities while lending? In the event of a borrower default, lender can sell or liquidate the collateral, recover at least a portion of the loan amount. It helps to mitigate financial risk associated with lending. Suppose you have taken a loan and you fail to repay it back, then it will be like a loss to the borrower. Sorry, lender. It will be a loss to the lender. So how the lender will get the money? So if he had taken the collateral security, he can sell a portion of, means he can sell the collateral so that he can procure, he can get the money. Presence of collateral reduces the lender's risk. So no risk for the lender. He can give the money. If you are unable to pay the money, he will sell the collateral. As a result, may be willing to offer more favorable loan terms such as lower interest rates or longer repayment period. And if the banks or if any other institutions are demanding collateral security from you, they may reduce the lender's risk. is no risk bearing for the lender because it has taken collateral security, and if you are not paying, at least he can sell it off. For individuals or businesses with less than perfect credit histories, providing collateral can be a way to demonstrate the credit worthiness. Sometimes certain people will not be credible, and they will not have a trust image among in the market. Sometimes they will not be paying the money on time, or they will not having a sound financial background. And for them, want to get the loan, they can give the collateral security. So that it is like a credibility. They can earn a trust from the lender and they may give you loans. Lenders may be more willing to extend credit to borrowers with collateral, even their credit history is less favorable. Maybe in the past, they are not having a good credit history. They may not be paying the money on time, but if you have collateral security, at least you may recover the money by selling it. It is like a trust on the part of both that is from the borrower, like a kind of trust which the lender is keeping on the borrower. That is, if he or she is unable to pay the money, they can get the money back. So it is reducing the financial risk, and it will not make the banking institution or the credit arrangement running in loss. Yes. Now, another question given is that in our country, a lot of people are poor, and whether is it affecting the capacity of borrow? Yes. If people are living in the condition of poverty in a country, it can affect the capacity of individuals to borrow. Poverty can affect various factors that lenders consider when evaluating loan applications. So, if you are very very poor, then how will you take the loan? Because you will not have collateral security and you don't have sufficient money to repay it back. Individuals in poverty may have limited access to financial services. Sometimes you are living in a poor condition, you are not educated, you are ignorant, and and you will not be able to go to a bank or a financial institution. You are not in a position to go there and to get the service. And as you are living in a poor condition, you are not having sound financial background, you will not be confident enough to approach a financial institution. Lenders often rely on credit reports to assess a borrower's credit worthiness. When before giving the money, often lenders check whether they are able to pay it back. Many individuals in poverty may lack significant asset. They don't have any kind of asset collateral and may not have the type of asset that lenders commonly accept as collateral. They are not having anything in their hand to prove that they are financially stable. Then, on the basis of what they can give the money. This can limit the ability to secure loans, especially those that require valuable collateral. So, wherever the collateral securities are needed, there it will be difficult for the people to get the loans from those institutions who demand collateral security, a valuable collateral security, because these people are not having any kind of valuable collateral security. In some cases, individuals in poverty face barriers to accessing traditional banking services. Limited access to banking can hinder the establishment of a banking history and make it more challenging to qualify for certain types of loans. So sometimes they are unable to access to banking facilities will not be available to these people, and they will be unable to get certain type of loans. They don't know what are the requirements. They don't know what are the terms and conditions. They don't know the schemes, or they don't know the policies, programs, and because of that, they are unable to get loan. So because of these reasons, large number of people who are very poor in our country, I mean, means what they are not in a position to get money from banks or any credit institutions. Hopefully, you understood the topic. Thank you.